Hi guys, welcome to Investify, where we help you grow your wealth through smart investments. Today, we'll provide you an update about the recent IRS regulation pertaining to the reporting requirements for transaction exceeding $600. This is a crucial matter that will impact your future tax filings, and I aim to clarify the issue. It's important to know that politicians are trying to make changes to the new IRS rules in December. Currently, the rule requires reporting of payments over $600 received from third-party payment processors like Venmo or PayPal. This applies to part-time work, side jobs, or selling goods. You'll receive a tax form called 1099-K in January if you meet these requirements. Don't ignore it, as failing to report it will trigger an automated IRS letter. The threshold used to be $20,000, but it was lowered to $600 this year by the Democrats in March 2021 and will apply in 2022. The Democrats passed the new IRS rule without any Republican support. They argue that lowering the reporting threshold to $600 will help catch wealthy tax cheats, but I disagree. It seems unreasonable to focus on people making only $600 inside income when the IRS is already stretched thin. Responding to automated IRS letters still requires human labor, which is a waste of resources. Some Democrats regret lowering the threshold and are trying to fix it in December. This idea will create additional complexity for millions of Americans who may need to hire a tax professional to handle the confusing tax form they will receive. Overall, I believe this whole thing is a disaster. Please be advised that if you use TurboTax to file the 1099-K form, you may have to pay for the upgraded version, which could increase your tax preparation costs. As a result, some people may opt for professional tax assistance, which is even more expensive. Additionally, it's essential to recognize that the burden of proof will be on you when you receive this tax form. It will be your responsibility to prove that you did not make a profit from your sales, which may require you to provide receipts from several years back. For example, if you sold a couch for $600 but did not make any profit, you would need to prove this to IRS. If you get audited and cannot provide receipts to support your claim, you may face trouble with the IRS. According to IRS, you are considered guilty until proven innocent. This is not an exaggeration, and anyone who has been audited can confirm this. If you don't have receipts to prove how much you paid for an item you sold, the IRS will assume that you sold it for $0, and any amount received will be treated as profit, subject to taxation. In this scenario, the IRS may appear to win, and the agent involved may receive accolades at the office. However, in reality, the government has wasted everyone's time, and you have incurred unnecessary losses. It's important to understand what to do if you receive a tax form called the 1099-K by mistake. First, try to contact the entity that paid you or should have paid you and ask them to fix the error by filing an amendment with the IRS. However, in reality, it's unlikely that they will help you. If you can't get the payer to fix the error, your best option is to report it on your tax return and offset it to zero under returns and allowances on your Schedule C. Attach a letter to your tax return explaining that you received the 1099-K erroneously. If you're working with an accountant, tell them that you received the form by mistake and that it's misidentified income. It's important to note that this situation may become more complicated due to last-minute changes being made by lawmakers. This will likely cause headaches and waste resources for everyday Americans, the IRS, and the tax preparers alike. The Democrats and Republicans in Congress are each proposing their own bills to address the 1099-K threshold issue. The Democrats want to increase the threshold to $5,000 with the Cut Red Tape for Online Sales Act, while the Republicans want to raise it back up to $20,000 with the Stop the Nazi Obsession with Online Payments Act of 2022. You can look up these bills on Google if you want to learn more. However, time is running out because Congress will be going on vacation soon. If they don't fix the issue before they leave, we will be stuck with a new rule for the next tax filing season. Unfortunately, the Speaker doubts that Congress will be able to fix this issue in time. eBay and other corporations are concerned that this new rule will discourage casual sellers from selling on their platform. and they have spent a lot of money on lobbyists to try to prevent it. Here are the answers to some questions that people often ask about the new reporting requirements. You won't have to report transactions made using Chase QuickPay. Zelle transactions won't be subject to the reporting requirements either, since Zelle involves bank-to-bank transfer rather than third-party payment processors. Keep this in mind as a potential workaround going forward. The reporting requirements only apply to sales of goods or services that are compensated. If you're simply splitting a bill with friends or paying rent, those types of transactions won't count towards the $600 threshold. On payment platforms, you can indicate whether the money is for goods, services, gifts, reimbursements, etc. However, it's worth noting that the reporting system isn't perfect and there may be errors. If you do encounter an error, you can refer back to this video for guidance. The recent IRS regulation regarding reporting requirements for transactions exceeding $600 has caused a lot of confusion and concern among small business owners and casual sellers. While the regulation is aimed at increasing tax compliance, it has created a burden on many individuals and corporations who may not be equipped to handle the new requirements. However, there are potential workarounds and exemptions that can be utilized, and there are efforts being made by both Democrats and Republicans in Congress to address these concerns. We hope that this information has been helpful in navigating this new regulation, and we encourage everyone to stay informed and vigilant as tax filing season approaches. Let us know your thoughts in the comment section below, and don't forget to do your own research. That's it for today. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.